Happy Friday, everyone. Happy May 26th. And wow, what a week for the markets. I don't know if everyone here follows what's going on in the world of tech, AI, all that, but I mean, if you were short anything in the last the last week or so that had anything to do with AI, you have gotten obliterated because a first of many to come maybe, but Nvidia, great producer of microchips, just hit a all-time high, and that hasn't happened in a major tech name in the broader indexes in probably about 2 years. So that's significant. We're going to talk all about that, why that's happening, and kind of the backdrop of how are all these stocks doing so well when all of us are still waiting and bracing for this recession that never seems to come. And even in the places where they are now officially calling a recession, like Germany, even their stock market's hitting all-time highs. So what is going on there? What is this big disconnect between, I guess, the way that we as consumers feel and the way that the market feels? Because, for the most part, I would say you can take a quick glance at the stock market and get like a feeling of where the general economy is at. But there are quite a few moments where there's these big disconnects in history. And this week has been a big highlight, I think, of that. So we'll dive into that. And we'll also talk about how Bitcoin fits into AI. The world of Bitcoin, the world of AI, I think are going to come to a point. And there's some interesting conversations around that I want to have with you guys and kind of open it up and see where we go from there. A bunch of quickie news and a whole lot more that happened in this crazy week. So once again, thanks so much for tuning in. Really quick, if you could hit the like button down below, it just helps get the video out to more people. Without further ado, let's dive into some charts to just see and visualize just how explosive a move we had this week. So this is the S&P 500. I'm a little too zoomed in here. But if we zoom out to the weekly, what you can see is just this chilling out, not doing much between March and April, and I missed last week, but between this week and last week, the market has decisively said, we want to go higher. So screw the Fed, screw 5% rates, screw an inflation rate that isn't really coming down enough, screw all of the traditional knowledge that you think you know about the markets. The market is telling you we want higher, and we want higher on the back of a couple specific stocks. Nvidia, 2 weeks ago, we talked about how the whole market was kind of being lifted up by Apple, Microsoft, and Google. They continued their rise up. Nvidia is joining the fray now, almost $1 trillion company after earnings. And it's kind of looking unstoppable for these tech names, just because they have this backdrop of generative AI and all the potential, economic creation that can be done with that. You have massive efficiencies that AI brings. You have massive opportunities and demand in cloud computing, all the things that you guys probably already know. And the market, I guess, was sick and tired of sitting on its hands, being fearful, which we have been for the last year plus, of the Fed raising rates and all that, and saying, look, it's time to finally look to the future, and people are placing their bets on the names that are best representing a positive and productive future. So yeah, is what it is. It's just a glimpse into the week. But something really interesting I wanted to note is for the last year and a half or so, QQQ, which is this index that is dominated by these technology companies, has been quite a bit behind where the S&P 500 is, which is a bit more of a diversified index. So the S&P 500 has a bunch of different sectors: technology, financials, consumer discretionary, and all that. It does have all the big tech names, but they're not weighted as heavily in that index, versus QQQ, where they pretty much take up the entire thing. And so for the last, year and a half, QQQ was bearing the brunt of, the fear coming from the rise of interest rates. All of these mid-sized tech companies were looking at the loans they had and seeing that, oh man, they're going to be renewed at these high rates. And, companies like Zoom, these big growth darlings during the pandemic, got slaughtered, and thus kind of brought down QQQ. Not to mention that there are bigger companies like Amazon and Tesla that just aren't really close to their previous all-time highs versus something like Nvidia or Apple or Microsoft. But with this recent rally in the last few weeks, QQQ now is with about 17% away from its all-time high, versus the S&P 500, which I don't have the chart on hand, but I believe it's about 14%. that there was a huge gap in that at one point. You know, at one point QQQ was down like 30+% from all-time highs, while the S&P 500 was only down about 20%. And now the technology names have really kind of closed the gap. And, you know, the S&P 500 is also still being held back by all the collapse of the banks and stuff. So that's kind of a framework as to where we are. More specifically, why NVIDIA of all these names, right? Like there's other semiconductor stocks, there's AMD, there's Micron. Like why is NVIDIA doing so well? A big part of it is that they've invested a ton of money into processing and data centers for generative AI. So when you think of NVIDIA, you might think of like your gaming GPU, the thing that lets you play, God, what have I been playing lately? I've been playing a lot of Zelda, the new Tears of the Kingdom game. You don't really need a good video card for that, but you know, all those new Call of Duty, like hardcore, really graphically intensive games, you think that, you know, NVIDIA makes a lot of their money from that. Turns out they only make about 17% of their revenue from consumer products. The other 80-ish% is basically from data centers. So they host these massive data centers, custom built kind of GPUs for specific purposes. And they're doing cloud processing for all that intense AI stuff that you've been loving lately, like Midjourney, some of the voice modulation software that can separate vocal tracks from instrumentals, all sorts of very visual stuff that you would need a GPU for versus CPU, which is more kind of relative processing, which might be more text-based. So the demand on those data centers have skyrocketed so much to the point that most analysts expected this coming quarter that they would make about $7 billion in revenue, and NVIDIA came out and said, nope, we're actually expecting about $11 billion. Like it is really accelerating how much people are using these tools. And so because of that, post earnings this week, the stock shot up like 20+%. So generally, a rule of thumb when you're looking at stocks and earnings and all that, it's less about how they did in the previous quarter and more about how they think they're going to do in the next one. And having a big revision to how they think they're going to do in the future has kind of thrown out all the models. And obviously, you know, getting to a new all-time high has also destroyed some short positions as well. NVIDIA was the most shorted stock this year, and short sellers have lost about $2.2 billion on Thursday alone, according to S3 Partners here, which is, really interesting. So, you know, they're on the forefront of this stuff, all these cool generative AI tools that you've been using somewhere in America or in China or wherever, an NVIDIA data center is running all of that stuff for you. So thank an NVIDIA data center near you. And if you're holding the stock, you're doing really well. Something that I got yelled at on Twitter for is I mentioned that basically every year in the last like 10 years, you would have made more putting $1 into NVIDIA than Bitcoin. And this is not like a knock on, you know, Bitcoin outside of just the price performance, but this is how explosive this company has really grown. And a lot of people say, oh, it's so overvalued. And it's just, you know, the market doesn't care. The market cares about where the stock's going in the future. It's really hard for people to predict how big this AI market's going to be, but people know it's going to be bigger than today. And so because of that, it's sort of acting like a black hole for all the new funds and money coming into the market. And that brings me to kind of the next topic here, which is that, okay, NVIDIA aside, aren't we supposed to enter a recession? Like every rule that, you know, we've sort of established over the last 20, 30 years about economics, where essentially if you have, you know, rates go up and a retraction in lending and loaning, that there's supposed to kind of be an economic fallout from that, right? And, you know, hopefully that also helps bring down inflation. Well, you can throw all that stuff out because it's just not quite happening. It might in the future, but in the present, not only do you have these AI stocks going crazy, people saying, you know, screw bonds, screw holding cash, all that, I want growth, growth, growth. But even the other markets, which have generally weaker economies, some of which have actually entered into a full-blown recession, they're seeing their stock markets rip to new all-time highs as well. And even ones that have historically been super, super weak over the last 20, 30 years. When we think about really weak international stock markets, nothing kind of comes to attention more than Japan, which has actually not made a new all-time high in their local stock market since 1990. And they're pretty much on the precipice of doing that right now, which is pretty incredible. So diving into a couple articles there. So European stocks close higher. Europe is going through raging inflation right now. In the UK, it's like 10% inflation. Germany is like 7 or 8%. In Germany, they just called for a recession because they've officially had 2 quarters of negative GDP growth, right? So things are not looking good. However, manufacturers in Germany are doing fantastic. Here we go. I got to get an article loaded up here. Manufacturing companies, which are kind of the growth engine of the German economy, car manufacturers, commodity manufacturers, the stocks in those companies are skyrocketing. And then we jump over to India, where their stock market has also hit a new peak. It also had this kind of big rise during COVID, retracted a little bit like everything did last year, and now they're hitting fresh new all-time highs. Japanese stocks are hitting a 33-year high. Some people say it's because they've finally had inflation in that country, I guess in relative yen terms. But all of the rules that we've thought about with markets and inflation have kind of been tossed away. And I think it's getting exacerbated because we live in this age of social media where everyone can kind of become an armchair economist. A film school guy can host a show talking to however many people are watching this and pretend that I know what's going on. Everyone has this set of rigid rules, and when the market starts bucking the other way, essentially you have a whole bunch of people caught offside. And I think in addition to some of the fears being overblown, you're seeing a lot of people realizing I'm sitting on a bag of cash waiting for a recession, waiting for a housing market crash, and it turns out that inflation isn't really going away, and I can't really buy bonds either because they're not beating inflation. And so I don't know. What I think you're about to see is I don't think I would be calling for even a short-term top on anything soon. I think, I think markets are going to rip a little higher just about everywhere. The question will be if it starts to move into some of these smaller names. One of the things that's been very distinct about, the last 2-3 weeks of this ripping market rally is that, like I talked about 2 weeks ago, it's been in a very small handful of stocks. So all the smaller growth names you think about, biotechs, these like financial technology companies, even Bitcoin, they haven't really done anything in the last 2 weeks. When you look at, let's just say, the indexes, if you remove Facebook, Amazon, Microsoft, Apple, Google, Nvidia, and Tesla, I know that's a sin. If you remove those from the S&P 500, that index is only up 1% this year. So the S&P 500 is up 10% annually for 2023. But if you take out the top 7 stocks, the S&P 493 is only up 1% this year. And these 7 stocks alone are up about 44%. So you can see this kind of big divergence between all this money kind of rushing up into these top gainers and no one else really feeling it. And I guess the question will be is you're either on two sides of the fence. Either you think that, well, eventually it will trickle down into these companies, in which case that is a buying opportunity for those, I assume. Or you think this whole thing is a bubble, this whole AI thing is getting overhyped, and these names are going to come crash back down to reality, and we're going to go into the full-blown recession, and everything is going to return to the status quo, the recession predicted that everyone's going to have. So I don't know what other scenarios there are, but I would say you kind of have two options for how you look at the future. It's essentially you think that either these stocks are way overblown, their time is about to come, or this money is going to trickle into these smaller stocks. But this giant divergence can't really continue for much longer. You can't have 7 stocks go up perpetually while everything else is flat. Eventually, that money will rotate into something else, and that's what will keep the index rising. My 2 cents. Curious what you guys think on this. What else? Yeah, and I think the really important, I guess, takeaway from all this, and the thing that had me scratching my head is, like, again, high rates, like, why is growth doing so well? I think it's essentially, it just boils down to, it doesn't really matter what inflation is on its own or what the Fed funds rate are on their own. It's about what the real rate of return is. And despite having astronomical inflation that we've had over the last, few years in the Western world, the real rate of return has been somewhat the same. So again, some people don't like CPI whatsoever as a metric, but if we go back to 2019, let's just say inflation was like, 1% a year or 2% a year, and then the Fed funds rate was 1% a year. So what you do is you take the Fed funds rate, you subtract the inflation rate, and that's what you get as kind of the real rate, right? So 1 minus 2 is -1. We're sitting now in the US at about 6% inflation and 5% Fed funds rate. So again, you take 5 minus 6, you get -1. So despite all the rates being higher nominally, or on the surface, nominally you're still at a real return loss, which means it doesn't really make sense to buy bonds. And essentially, the big counter to getting in all these growth stocks and putting your money into the stock market is buying bonds. And so as long as they're negatively yielding, people are still going to chase these growth names. And because they have this great narrative behind them in AI, it's kind of hard to calm the animal spirits, I think, in the interim. All of this stuff can change overnight. I think if inflation fell radically all of a sudden, who knows? Black swan event and the rates are at 5%, then yeah, you'll see a retreat in these growth stocks. But I think as long as that real rate stays negative, growth is just going to reap the benefits from this. And my thesis is that eventually it will trickle into other stocks. It won't just be 7 that you have to invest in, and if you miss those, you miss those. Just typically every single time those 7 have risen, they've taken turns swapping spots in their individual ranks, but it benefits companies that work on the periphery of what these companies are doing, because despite how we like to look at them as monopolies, Apple, Microsoft, Google, Tesla, Nvidia, they all have competition, and people want to buy the next Tesla, and people want to buy the next Amazon and the next Facebook, etc. So yeah, my 2 takes. Curious what you guys think on that. We'll dive really quick into our sponsor here, Beaver Bitcoin, which Bitcoin itself we'll talk about at the end of the show. But yeah, I'll see you in a minute. This week's show is brought to you by Beaver Bitcoin. Dollar cost averaging is the most stress-free method to enter the Bitcoin space. And if you're looking for a simplified way of buying Bitcoin in Canada without needing to rely on a custodial exchange, Beaver Bitcoin is your best bet. Beaver Bitcoin lets you set up recurring Bitcoin purchases directly from your Canadian bank account and straight into a Bitcoin address that you control. It's like a savings account in a currency that you actually want, or a Netflix subscription that doesn't suck. And if you don't want to wait to stack sats, Beaver Bitcoin supports instant non-custodial Bitcoin buying via e-transfer as well. Give it a shot today at beaverbitcoin.com. Alrighty, so yeah, if you're in Canada, get yourself some Beaver Bitcoin. Super easy way to buy Bitcoin, no more touching any of these exchanges. I mean, Canadians now can't even use Binance, that's going to be out of the country soon. So stick with Beaver Bitcoin, bank to your Bitcoin wallet, easy as that. Let's talk about some quickie news this week from around the world. So we got 9 Asian countries coming together for a meeting with the Asian Clearing Union, talking about how they want de-dollarization. And so de-dollarization is not a voluntary choice by countries, they say. Now, take it with a grain of salt. This is coming from a lot of these quotes are coming from Iran, which notoriously do not like the U.S. because of trade sanctions and history and all that stuff. But you have a lot of ACU members like the Bank of Bangladesh, the Royal Monetary Authority of Bhutan, which we talked about 2 weeks ago, about how they've been secretly loading up on Bitcoin and mining Bitcoin. The Reserve Bank of India, the Central Bank of Iran, Maldives, Nepal, etc. Lots of these kind of countries, somewhat in the Middle East, some a bit more eastern around Asia, that are talking about let's do commodity settlements without using US dollars. So again, this is a continuing theme. I don't think de-dollarization happens overnight, but it's interesting to kind of see this take brewing amongst other countries that we should have a different reserve currency. And again, my take on this is that ever since the US froze Russian assets and blocked them from the SWIFT system, that has put a lot of tension on non-NATO countries to kind of move away from the US dollar, because essentially if you piss off America, which is a very volatile place politically in the last few years, you could lose access to your trade settlement currency, and that is not optimal if you are running a big country that might even have more people than the US in it. All right, I posited this one in the comments or in the poll thing on this, but I'm super curious. So Elon Musk now has FDA approval for Neuralink. So they're going to be implementing Neuralink into people. There's going to be a bunch of concerns with this, obviously, a chip in your brain. But major issues involved with this are the lithium battery of the device. I don't know if you want lithium in your brain. I don't know if that's good for you. The possibility of the implant's wires migrating within the brain, and the challenge of safely extracting the device without damaging brain tissue. So my chip that I liked, except when it went wrong, was the way they did it in Spider-Man 2, where Doc Ock has this thing on the back of his neck. But it's kind of gross. It like puts these pins into his like spinal column, and then somehow gets into his brainwaves. But what I kind of wonder is, like, when they do this chip, if they're going to get like under the skin inside the skull, or if they're going to be able to basically electrically send the signals kind of like topically, almost like a wireless charger. They just attach something to the top of your head, and then it just beams down into your brain, and you can interface with it without actually having to connect anything into, I guess, the cartilage of your brain cells. Kind of gross stuff, but I posit the question. Let's just say they get all this stuff figured out, and they can start building things on this. One of the things that they talked about with Neuralink is helping solve autism and Asperger's and dementia and some of these different, neurological hiccups. Let's just say they get this interface working to the point where you could put one of these things on and then start speaking in another language. Would you do it? And under what circumstance? If there's there's people that are just never going to do something like this. There's people that would maybe do it if governments approved it, but we all know the FDA has had a credibility crisis in the last few years. But there's some people who would even volunteer to do it. And I posit the question to you: what kind of branch do you fall under? Are you bullish on Neuralink technology, or is this you're never going to touch this sort of thing in your life? Situation? Let me know. I'm curious what everyone's take is on this. I personally, I don't know. I don't want to call myself fearless, because I am scared of things. I do take a lot of risks, but part of me feels like I would be the type of person who would even test this. And if I die, I die. I feel like I've done some good stuff, but I don't know. I feel like this could also be really interesting to test. I'd have to do my own due diligence as much as I could, but I don't know. I'm the type of person who would test something like this, believe it or not. Kind of a weird thing. But yeah, who knows? Hong Kong, in more down-to-earth news. Chinese state TV ran a 90-second segment about how retail investing was allowed in cryptocurrencies in Hong Kong. And if you might remember from weeks or months ago, we talked about how Hong Kong is sort of China's window to the world. That if you're a wealthy person in China and you want to invest internationally, what you do is you set up a shell corporation in Hong Kong, or some type of family office there, and then you can start investing in all these different things, venture capital, so much and so forth, that wouldn't really be allowed on the mainland. And so China kind of quietly allows this because they know that they can't only have real estate for people to invest in within the country or Chinese stocks. So they let wealthy individuals come into Hong Kong and invest in these things. And Hong Kong has really pivoted to be quite bullish on cryptocurrencies. A couple of months ago, they announced that they were creating a framework for institutional investors to get into cryptocurrency. But now they're rolling out things that will allow retail investors to get into it, which almost puts them a step ahead of the US and Canada, which is still developing their rules and all that on this. So Hong Kong is really saying, hey, if you want to trade cryptocurrencies or own it or invest in this space, set up an office in our country, and we'll make it easy for you. And even the Chinese state TV covered it. But funnily enough, about, I think, a day later, they deleted all traces of that report as to not put that into the mindset of maybe the general Chinese population. I don't know why they would censor it beyond that. You'd run the segment. I guess it kind of slipped through the cracks. But now there's no traces of that report anywhere on Chinese state TV websites. Completely wiped. So that's interesting. And more AI news. Microsoft coming out saying that we need a new government agency to regulate AI. I guess they don't feel fully confident in Kamala Harris's ability to do that on her own, which is not quite understandable, but I don't know. Some people are just bigots, I guess. This is sort of the architecture, the regulatory framework that they've proposed here. So they want applications to kind of comply with regular evolving laws and regulations, stuff like copyright laws, for example. And then these pre-trained AI models, the GPTs of the world, they want them to be regulated through safety and security requirements. They have been known to leak data. There was a thing that showed up last week where somebody was able to get ChatGPT to leak the financial or like personal info of other ChatGPT users. And then they want some architecture on AI data center infrastructure as well. So licenses for training and deployment of powerful AI models based on security protections, export control compliance, and safety protocols to ensure human control over autonomous systems that manage critical infrastructure. We're really in the future, boys and girls, really in the future. The thing that's super interesting about this is that generative AI, like the ChatGPT stuff in particular, can run on like a 1 terabyte SSD. So like one of the suggestions that I saw from Jeff Booth from a podcast is he said, go look up ChatGPT or GPT for all and download it onto your computer. Because if for any reason, regulatory freakout happens or your jurisdiction bans it like they did in Italy, you can still use the tool as if you were online essentially by having it on your own computer. And GPT does interface with online information, but it also has like a broad knowledge set already built into it. And so you can download ChatGPT as you know it in about, I don't know, what's a terabyte of data for a fiber optic connection. Maybe that's like a day or two. You can download all of ChatGPT, run it offline, run it natively because it is pretty much open source, and you can train it, on its own essentially, and not have that particular iteration of the AI be exposed to anything else. So that's something kind of interesting about all this stuff, is that there is a lot of AI that is open source, and it is almost kind of hard to compete with open source in the end. So I don't know how they're going to regulate all this stuff, but good thing I'm not in charge of it. I wouldn't know the first thing about it. All right, so lastly, I got a bit of a rant here. And I tried to like flush it out a little bit before the show, but I'll take it piece by piece and hopefully it kind of comes together and makes sense. We are on the precipice of two big revolutions, and one of them is Bitcoin, and it feels like it hasn't really gained that much ground when you compare it to all the stuff that the AI revolution has done in the last year. It feels like Bitcoin's moving really, really, really slowly. Versus the world of AI. And I think that's another reason why people don't really, they're not searching Bitcoin as much anymore. I think people who are interested in technology are super into AI, and they've just said, crypto, blockchain, all that. It's like, forget it. Like it's had its time. Let's move on to the next big technology. What I think is that ultimately they have very important roles that they play within each other. And I think that AI is an accelerant to Bitcoin, and at the very minimum, an accelerant to the destruction of the current state of the fiat system. And I'll kind of break that down on how I see it. So Jeff Booth wrote this great book called, why can't I remember the name of it? Something of Tomorrow, The Power of Tomorrow or something. God, I'm not good with memorizing names sometimes. This is why I need the Neuralink chip. Anyways, Jeff Booth wrote this great book about how technology is inherently deflationary, right? Like we develop technology so that we can get more for less and for faster, right? I mean, that's the whole reason that we have phones. We don't need a calculator. We don't need an MP3 player. We don't need a newspaper. We got it all in here. It's essentially driven the cost of production of all those things and the cost of distribution of all those things to zero, right? And so when you create a technology, people get richer in some sense, right? Or like they're able to get more value and information out of something when they have access to a new technology. But not everyone gets the increase in property that comes from these technological revolutions. Generally, when a new technology is developed, it's the developers and it's the pioneers and it's the big corporations and these small firms and the CEOs and the shareholders of them that reap all of the financial benefit of it. And they're able to take that, financial benefit and go out and get scarce resources that exist in reality. And so, an obvious demonstration of this is like all the Silicon Valley millionaires and billionaires that were created over the last few years, sure, they still own a ton of stock, but they're also out there buying up like swaths of farmland, property in all sorts of different jurisdictions around the world. And these things that they own are basically removed from a very scarce, finite supply of real things that technology can't create. So technology cannot make more farmland. Well, it sort of can if you tear down the Amazon rainforest, but that's missing the point. The point is that they're going out and they're buying scarce resources, whether it's, finite artwork, whether it's, gold, whether it's limited production of certain physical products, whether it's land, etc., right? And we benefit from those technologies as well, but it hasn't really, in my opinion, proportionally helped people enrich themselves. It's given people the opportunity to create businesses based around those technologies, but at large, for every, one person that is leveraging a technology like AI to make things cheaper for themselves or to start a new business, there are 5 people, or 10 or 20 or however many you want to think about, that are not getting anything out of that and are in fact at the same time getting poorer for other reasons. So the deflationary breakthroughs of technology are having their savings and that wealth realized much more by the managerial and wealthy class. They're the ones who own the shares of these new companies. They're the ones who are getting the profits from them. Their profit margins are expanding. Your wages are not. In fact, a lot of the time, especially when it comes to AI, your wages are being devalued or crushed, or your jobs are made obsolete whatsoever. The problem I see with AI, and it's not like we can do anything about it, honestly, from a technology perspective. You can try and censor the technology. But the problem I see with AI is that it hyper-accelerates all of this stuff. And so we are right now in this phase where it's just a ripe breeding ground for people who have ideas, who are keen to learn and master this technology to create a ton of wealth for themselves. If you dedicated the next, the next 5 years spending like 2 hours a day messing around and learning the fundamentals of generative AI, the chances of you not getting a significant increase in your wealth compared to not doing anything are pretty low. Like if you're putting in the work learning about AI, you're eventually going to find a way to use that technology to make either something in your life cost less or to create a product that will create you more capital. The problem is like not everyone's going to do this. Just naturally, this is how every technology sort of works. And so while AI has leveled the playing field to some degree, it's made, a person with like 80 IQ be able to generate and create essays that they can say are theirs, even though they're not really theirs. College level essays with an 80 IQ, everyone can make them now, right? Ultimately, all of the gains of that capital, I think, fall into the hands of corporations. And in my opinion, what this does is it just accelerates the wealth divide. I think it's very, very clear that AI not only is going to provide a ton of capital and create a ton of wealth for people who are harnessing this technology, but it also expedites this move to just replacing humans in everyday tasks. And it's really hard. I think it's harder to predict the outcome of that. Like, how many jobs will be done by AI? Will we never have real humans in customer support 10, 20 years from now? Will nobody drive a car on the road 20 years from now? I don't know, but we know that to some degree AI will disrupt that. It's going to leave a lot of people without much skill or usable, profitable skill in the workforce. Everyone will be, who went to school to train for these mental tasks that are now being able to be done better with AI are going to have to figure out what to do with their productive capacity as a human being. And so what that ultimately leads to, the wealth gains that go to the people who master this technology and the deflationary effect of this technology on people who are obsoleted by it, is going to increase the wealth gap so much. And I think the obvious outcome of that, if you look at any other point in history, is that it leads to societal malaise, societal malaise, distrust of people from these other classes, and it leads to ultimately people saying we need a safety net, right? And it leads to people saying, well, we're just going to vote for whoever promises us the most. We went to school, we racked up all this debt to work in computer science, and now a child can just do the bug fixing that I was getting paid $100K a year for 5 years ago. Now I don't have a job. Now I got to figure out another skill. Not everyone is going to be able to adapt to that easily. And that's just the outcome of almost all technologies. The challenge with AI is just the acceleration of it is just so much faster than almost any other technology. The disruptive force, like it took cars decades to get on the road to replace horse and buggy. And AI is going from 0 to 100 in like months. Right? And people are just not equipped, and people weren't really in a great financial situation before the big AI revolution. So it's technology is agnostic. Technology in of itself is not political, but the net effect of it is it trickles up. In our current monetary system, it is going to create wealth with the people who are harnessing that technology, and that wealth is just not going to get redistributed to everyone else. So that's sort of the basic framework of what I'm coming at with this. And what the next effect is of that is, I think, the acceleration of the collapse of fiat. You have a system right now which is leveraged to the gills with debt. That's going to be okay for the AI companies that are doing it. They're going to be able to borrow. It doesn't matter what the rate is because they're growing so exponentially fast, they can handle it. All these other companies that are not on the AI bandwagon are getting crushed with high interest rates, high inflation, and essentially what that leads to is that the technologies that do not benefit from AI, the companies and the businesses that are growing at slow paces just get destroyed, and there's no capital essentially to invest in them. And so you start seeing it slowly in different ways in society. We had this kind of discussion, and it's probably still going to be an ongoing thing, that commercial real estate isn't really going anywhere. Why do we need offices anymore? Especially when we're getting rid of bodies in the workforce anyways. So you have all this commercial real estate, and the big thing there that people have to decide is, do we let these loans default? Do we bail them out? Does the government possess these buildings and turn them into rental units to help solve the housing crisis? What are we going to do? That's just one tiny little problem. The other problems with this is when people lose their jobs, the inevitable conversation becomes UBI, right? But in terms of paying for UBI, the way our tax system currently works is that for every $1 that corporations pay in tax, individuals pay $10. That paradigm cannot flip overnight, right? You cannot you would have to 10 or 100x the amount of dollars that you get from corporations that simply don't exist to flip that ratio, right? Until then, individuals are going to be the way that budgets are paid for, the way that pensions are paid for. The individual, the tax receipts that you pay to the IRS or whatever, is the vast majority of how things are funded in the US. And kind of like a smaller chunk of that is, the top, 1% of society. Their individual tax returns are the bulk of the wealth. But as countries look to try and make up that shortfall, they really have two options. It's either raise taxes or print money. And they'll do a combination of both. But the risky part about raising taxes is it can have this effect of driving out the same amount, if not more capital than the increase in taxes actually raises. So you might want to raise the corporate tax in the US to pay for all these new programs that are necessary because of AI's disruption, like UBI. Go ahead, raise the corporate taxes, raise the individual taxes, and see what starts happening. Talent starts leaving, corporations start setting up offshore, accountants who come up with clever tax schemes get paid double time, and essentially that doesn't really work long term, right? The other option is print money, and I think that's ultimately where this is going to go. There's a third option, which is defaulting, but we just don't know that's just not going to happen in nominal terms. It's just so easy to just click a button and make more money and get rid of the rot on the balance sheet and just restart the playing field. Every country has gone through this. I thought about this before because I've posited this idea quite a bit that people can either default on the debt or they can just print more money. Governments don't default on the debt if they don't have to. They just don't. And other governments which should be defaulting, like all of these poorly managed countries in South America and in Africa that should be defaulting on debt, they're getting the US's new printed money, right? So no one's allowed to really, really default. Money printing happens and it always covers the shortfall. There's always a loan somewhere, even if it makes no economic sense in the world. And because of that principle, I think it's just clear as day that nobody is going to palatably take the idea of austerity seriously. The whole, we can't pay for everyone's pension, we're going to have to start cutting pensions. It's never going to fly. Any politician that suggests that, They're never going to win. And so AI, it accelerates this move into what I think is the collapse of the fiat system. The collapse of the fiat system is brought about by just endless printing, a debt jubilee where everyone's debts get wiped, more capital or money is created out of nothing. And all of that kind of moves further and further and further up the chain to some degree. The reason that we don't talk about Bitcoin, even in the countries that have a pretty collapsed fiat system right now, is because the infrastructure just simply isn't there. I mean, if Argentina's inflation is like 113% and Venezuela's is like 200 or 300%, and we're led to believe that Bitcoin is the scarcest money on earth and it's like much more superior to the US dollar and all these other things, then why hasn't it been picked up? Like, what's missing from the equation? Is it just governments banning it? Oh, Bitcoin's not supposed to be able to be banned from governments, right? I mean, where's the common sense in that? Like, Argentina and Venezuela, they should have adopted Bitcoin by now. If Bitcoin was the superior money, they should have adopted it. And I think what some people in the Bitcoin space have to come to terms with is that we're just not there on a technology level yet. We have not made Bitcoin accessible enough to people. We haven't educated enough people to kind of understand that it's the superior money. And it's just not ready for the limelight yet. But this system of fiat collapses, it accelerates the development of Bitcoin as well. So AI accelerates the collapse of the fiat system. The collapse of the fiat system accelerates the development of Bitcoin. And as we start seeing more of this stuff, this chain where all these things are interlinked, start affecting one another, that's when you start seeing these rapid improvements in Bitcoin. And I think the best is yet to come. I think that we've kind of, we look at the price of Bitcoin to give us a perspective on how, I guess, advanced the technology is sometimes, and I think that's the wrong view. I think the advancement of the technology is not always going to be represented by the price. It's going to be represented by what is happening in the trenches, the programs that come out. And I think Bitcoin actually has a really bad flaw in that sometimes when the price of Bitcoin is really high, the people who are in charge of building the next set of revolutionary products that get it into the hands of more people, they kind of rest on their laurels because they're exposed to Bitcoin and their company's valuations go up and they get lazy. Like Jeff Bezos had a quote saying that he never looks at the price of his stock because it's just not going to do anything, right? Anybody who does is wasting their time at his company. He scorned people who spent time looking at the stock in his company. He was just focused on building the product. Bitcoiners have this problem where sometimes we think the battle is won just because the price of it has gone up, X%. And we need to get over that, and we need to keep building regardless of the fiat collapse that is going to happen anyways. But in the end, when I look at what is going on with AI, I think there's so much opportunity to build on Bitcoin, and it's better to do it now than wait until we really need something like Bitcoin and scramble to get something working. I think, it's kind of a blessing that Bitcoin has these halvings every 4 years because it gives us some lead time. It gives us this kind of euphoric pump that draws a bunch of new talent in. 90% of it gets swept away, but the 10% that sticks each new cycle are the people who build the next generation of products on Bitcoin and makes it usable by people around the world. And AI is going to accelerate those cycles, I think, to some extent. So, yeah. That's my rant. I hope that kind of made sense. I know that the price of Bitcoin has not been doing anything in the last few weeks or months, but I think it's coming to some degree. I think as people start to internalize the ramifications of AI, we have not seen AI's impact on employment rates or anything like that. This will happen in our lifetime. And I think it's just interesting to always just stay cogent of the little hints of where things go. I'll try and bring that out in the show in future episodes. But it's amazing to think that we live in a time right now where we have, by official metrics, the lowest unemployment rate in almost 100 years, yet one of the most disruptive technologies I think that humanity has ever had in the palm of their hand. These two things can't coexist forever. One of them has to give in. Either we stop developing technology, which is not going to happen, or unemployment rate is going to skyrocket. And it's going to lead a lot of people into realizing the fiat system and all the problems with it. And in turn, that accelerates the adoption of Bitcoin. So there you go. All right, that's it for today. Thanks so much for tuning in, guys. I'll step into the comment section, see what you guys had to say for today. Don't forget to give the video a like down below. A like down below helps it reach more people. All right, let's do a pop out of the chat here. Let's see, we got 12 votes. Overwhelmingly, nobody would get the brain chip. You guys are gonna eat your words in like 50 years. I think everyone's gonna get on board with this thing. If it works, I think they'll figure it out. We don't really know if they can yet, but if they do figure it out, I think everyone will be on board. The price of tomorrow, geez, really messed that up. Keegan, yes. Oh yeah, you're on the coast. Oh yeah, small win I'll share with you guys for today. The reason that I wasn't here last week is because I was working on building a staircase, physical labor on the island. So this is like something that AI can't solve. Like unless I have those little like animatronic Android Tesla bots, no one's gonna build a staircase. And then, you know, hiring labor to come out there is another thing too. When it's a 2-day project, you have to give them like room and board, or else you're shuttling them in and out, and the water taxis don't really work like that. So yeah, I built a staircase this last week. That was fun. More physical labor. All right. What else? Well, step 2. The market is very news driven these days. One day the market could rally or drop based on these headlines. Yeah, I think the market has had a turning point where, I mean, if you really think about it, you could argue that the turning point was last year when there was all that like tax selling. That could be looked at as capitulation. But I think it's very clear now that AI is sort of the new narrative. And yeah, that is a news-driven thing. I think that like all new technologies, we will get ahead of ourselves with overestimating how much AI can do in the immediate term and how much the revenue potential is for this. But yeah, I think for now, there's still some more room for people to get stoked on this stuff. All right, government will be able to access your seed phrases in your mind with Neuralink. That's true. That's true. You'll never be able to truly own Bitcoin if you have any recollection of your seed phrase. So yeah, maybe I regret saying that I would get Neuralink, because then my Bitcoin would never ever be secure. Even if there was a multi-sig, it would know who I gave the other signatures to. Doesn't AI require like 8 semesters of calculus, discrete math, statistics, and only the top 10% can ever learn that stuff? Well, it's not about learning, I think, necessarily how it works or why it works, and more how to use it to your benefit. So I think all of these things like Auto GPT and all these other tools and plugins that you can use, they kind of liberate people to be more productive. And eventually everyone, or a lot more people, will understand how to best maximize the use for these things. But if you figure out how to, let's just say, take a generative AI tool and make a very specific application for it, like one of the things that you can do with NVIDIA's chipset is you can separate audio. And so someone just set up right now, instead of you downloading an app to do this, they set up a website where you just upload a clip, right? And then it does all the post-processing like an app on your computer would, but it's all done on the cloud. And then they say, hey, if you want this clip, it's $5.99 a month. Even though anybody with like a somewhat rudimentary understanding of computer science could do this offline on their own, by building a website that kind of does it easily, they're capitalizing on AI and people's, you know, lack of ability to, or you know, patience to do this on their own with their own software. So much like how we saw in, I guess, Web 2, where all these like apps, ride sharing, etc., were all created, that essentially you could have just organized, you know, peer-to-peer if you really wanted to, but by collating all this stuff into like one cohesive portal with like really easy to use UX, UI, companies are able to profit off of ideas that weren't really necessarily innovative or brand new and didn't really require the creator or the idea person to be like a big coder or a math wizard or a calculus wizard or anything like that. So I think you see the same stuff with AI. Really simple tasks that like any GPT bot could probably do if you knew what to ask for correctly, but presented in a way that allows the average person to click a button and get something done, rather than install like a whole code set or download a terabyte of data. Keegan says, great staircase, beautiful property. Yeah, you guys should come out. I eventually, when I feel proud enough of everything here and it's all working, I'm getting the electrical done soon. I got the solar generator, but I've been just plugging things into that with extension cords. once I get the electrical done, I do the walls and all that, maybe do some more landscaping. It'd be fun to get some people locally to come out to the island. That would be a real treat. We'll set something like that up. I don't know about this summer. Maybe next summer. It would be cool if you guys would be down. We can have like a little get-together or something. All right. That is it for the day. Thanks so much for tuning in, guys. Really appreciate it. Hope you learned something. Hope you enjoy my long-winded rants. Maybe you heard something new. Maybe you didn't. But I enjoy these. And I may or may not be here next week, but I have an awesome video coming out about trucking. I'm really excited for this one. I keep moving away from videos where I just yap at you and spout off facts, and I'm trying to get more into this like emotional storytelling where I let certain people or characters tell the story. I'm trying to create videos that an AI couldn't come up with, really human stories about the world of Bitcoin and some other stuff. And so that's the direction the channel is headed at large. Less of this like informational, like little 60-second whatever, like educational stuff, and more story-driven stuff that is still linked to finance in some ways that is kind of unique. So yeah, excited to show you guys that one. If you were a follower of the Trucker Convoy, you're really going to enjoy it. So yeah, looking forward to it. Maybe a week or 2 weeks from now it'll be out. But yeah, thanks so much for tuning in, guys. Take care and have an amazing long weekend for some people. Or last weekend was a long weekend. Have an amazing weekend, long or short. Take care.